How can you bring, or how should you bring, the idea of the 5 profit centers of a rental property into your analysis of a rental property? So you want to buy a rental property and you're looking through different properties. How do you evaluate a deal? So let's stop right here real quick. If you have not seen my video that dives into the details about the 5 profit centers of a rental property, look down below. There's a link down there to the video where I really dive into those. If you have seen that video or you're just excited about 5 profit centers, smash that like button. Hello, we're talking about profit. Let's be excited here. So 5 profit centers of a rental property. In short, a rental property can make money in 5 different ways: cash flow, appreciation, tax benefits, equity build via mortgage paydown, and hedging against inflation. Cool. That all sounds great and gravy. And I'll admit, when I first started buying rental properties a little over a decade ago, I knew about these profit centers, but I didn't really, I guess, have context for them. And now, fast forward a little over a decade of owning all of these properties for this long, now I see how valid and serious these profit centers really are. Looking at my properties and weighing them against each of those different profit centers, oh my God, this is one of the biggest advantages of owning rental properties, period. So many ways to make money versus like stocks. You have one way to make money. The value of your stock goes up or it goes down. End of story. A rental property can make money in 5 different directions. Why does that matter? Aside from 5 profit centers is exciting. Think about it in terms of shopping for a property. When you're shopping for a rental property, there's not just one way that it's going to make money. There's 5. I think we established that. But quite often, and I'm one of those, it's very normal. When we're looking for rental properties, oftentimes we're just looking at one of the aspects. If you're buying turnkey rental properties, like I've always worked with, you're probably just looking at the cash flow because appreciation hasn't always been expected on them. And the rest of the profit centers are kind of like mysteries. So it's about cash flow. But is that an accurate assessment? Or let's say you're not focused on cash flow and you're buying in Los Angeles or San Francisco. What are you probably focused on? Appreciation potential. Again, that's one of the 5 bars. So I like to picture it like, picture a bar graph. I used to be an engineer, so I love a good bar graph. So you have your graph and you have 5 different bars. You have one for each of the different profit centers. So any particular property, and this goes for any property that you're going to evaluate as a potential rental property investment, is going to, if you will, rank differently in each of those different profit centers. Tax benefits and equity build via mortgage paydown, I'm not going to dive too much in because those are more complicated calculations. They're a little bit more direct. They just kind of are what they are on certain properties. But in terms of, let's say, cash flow and appreciation being the big ones, and we're going to get into this inflation bar because that's definitely kind of the mystery one, but it's important. So just looking at cash flow and appreciation. So you want to buy a property in Los Angeles, for example. That appreciation bar may be pretty high. Like there's a lot of appreciation potential in Los Angeles, depending on when you buy, and it's speculative, but in theory, there's a lot of appreciation potential. The cash flow bar, so if we're kind of like neutral, and here's all the positive bars, is negative. Like you're probably going to be negative cash flow every month for at least a little while on a Los Angeles property if you're renting it out. Does that matter? It depends. Can you afford that negative cash flow? And what is the appreciation potential? What are the ways that this property is going to make money? So you don't want to just evaluate a property with one of those profit centers. You want to look at all 5 in order to more properly evaluate a deal. Same with a cash flow property. Maybe the appreciation bar is pretty minimal, but the cash flow potential is high, or the expected cash flow is high. So it's so easy for us to get roped into focusing on one of those bars, but here's a more accurate way to look at it. And I want to be very careful in saying this because one of the advantages of having 5 different profit centers is risk mitigation. Because hopefully, if one of those income bars, if you will, or income profit centers tanks, or it has a bad year or whatever, in theory, hopefully, you have 4 other profit centers, at least 3, to help continue to give returns. So you're not at a total loss. Let's say you have a property that has 10 months of vacancy for some freak reason, who knows what. So your cash flow just tanks. Does that mean you're at a loss? Not necessarily. You have 4 other potential ways of making money on that property. So it may not be liquid cash in your pocket in that moment, but it doesn't mean that the property is a negative return. For details on this, I actually really dive into this in a video where I talk about someone gave an example of losing $10,000 of cash flow in 1 year. And they're like, oh my God, I have to sell the property. This is a terrible investment. Is it though? Check out the video below where I really dive into that because that is part of this discussion. But we're looking at 5 different profit centers. So instead of just looking at those as you own the property, like, oh, I had a lot of vacancy, cash flow's down, but like, oh, I made money in other ways. That's great that you're looking at that because then you realize it's not necessarily a bad investment right out of the gate. But what about when you're shopping for a rental property? So this is especially true and important, and it's 2021 right now. Who knows when you watch this video what the housing market will be doing, but in 2021 inventory is low, prices are high, and interest rates are getting higher. So a lot of people are really focused on that cash flow bar. They're like, ooh, I was going to get cash flow, but now there's not a lot. What bad deal, bad deal. Well, but is it though? One I want to highlight, I said I was going to highlight it, is the hedging against inflation. Rental properties are one of the best hedges against inflation possible. The more inflation happens, the more profitable your property is. I hesitated there because I was like, do I want to dive into exactly how this works? I don't think I do. But in short, if you know anything about inflation, what happens during inflation is the value of the dollar becomes less. If you buy a property today for 100,000 today dollars, 10 years from now, $100,000 is going to be worth way less than it is today. Meaning, if you have a fixed mortgage or a fixed interest rate payment on a property that you buy for $100,000, you have paid less than what it's worth 10 years from now. Hopefully that makes sense as to why that's an income stream, because appreciation is one end of it, but the value of the house is also going to go up just from an inflation standpoint. So sorry for that hesitation there, but I definitely want to, inflation is so important, but it's such a big topic. That's why I held off for a second. But going back to these 5 profit centers. So what if cash flow is low today, but what if the feds are printing so much money? What if there is dramatically more inflation? I mean, inflation is going to happen regardless. But right now in particular, there's a lot of expectation that inflation is going to get really bad because of our current situation in the economy, our current housing market, and how much money the feds are printing. So if inflation is predicted to be worse or higher than usual, that's actually that much more profit. Oh, okay. So maybe the cash flow bar comes down, but the inflation bar goes up. Whether we can quantitatively analyze this, not completely, but it's so important. The moral of this whole story is look at all 5 profit centers on any deal that you're looking into and see where exactly do you expect to profit. That's where the important parts come in, because then you can also mitigate against risk. Like, do you want a completely speculative property? I mean, if you're only speculating on appreciation and inflation going up, yeah, maybe. But if those are actually very promising factors and the cash flow is a little bit lower, maybe it's a good deal. Or if it's a total cash flow play, which would be hard today in 2021, what about appreciation and inflation? Never mind the profits you're getting from tax benefits and equity build via mortgage paydown. Anyways, back to the point of this. There's not one aspect to look at on a property. This isn't even bringing into the conversation about risk, like how much work are you putting into it? Like there's so many different factors that go into a property. The point is look at the overall picture, especially those profit centers. Now, for the really important part, if you have any experience with owning rental properties, how have they profited? What of those profit centers have allotted you the most amount of profit? Do you have cash flow properties? Do you have appreciation properties? Have you had any experience with inflation? How have you seen the tax benefits? Everything you want to share about how your rental properties have profited, leave it in the comments below. Never mind, it's very exciting for all of us to read about how profitable these things can be. But There's also a lot of room to learn from everyone else's experience. What things to look for, what things to be cautioned. Did you dive into a speculative investment? Did it work or did it not work? And why? So anything you're willing to share, throw those down in the comments below, and I guarantee it's going to be a great conversation. But remember, when you're going to shop for a rental property, look at the big picture so you understand exactly how it is that you plan to profit.